Hi everyone, welcome back to another episode of Charting Markets with Jeremy. Well, today let's take a look at gold. After seeing some decent breakout move to the upside playing out, probably it's worth taking a look again at gold. And in fact, if you were to take a look, the recent price action of gold has actually seen some nice appreciation over the past few weeks. Mainly stemming from the rising inflationary trend, not just in the US, but also happening globally. So in fact, last week, we actually saw the CPI number that was being reported. For the month of October, we actually saw the inflationary number rising to a new 31-year high at 6.2%, which is also why we saw this sharp rally in gold prices last week, as well as moving into this week. So possibly investors' funds are slowly moving into gold as a form of inflation hedge. And as inflationary continues to remain elevated here in the near term, probably for gold prices, it will likely continue to do well in the near to medium term, probably over the next 3 to 6 months out. So if you take a look at gold on the weekly time frame chart, zooming out and taking a longer term view, for gold, it has actually been trading in a correction phase going back since August last year. And that also means that we are actually trading in a correction phase for already more than 1 year or so. And right now, possibly with the recent breakout move that we saw, that could be a turnaround and trend here, back into the uptrend right now. And a closer view over here, you can see for gold, it has actually been trading in a consolidation for a good 5 months or so, mainly trading back and forth the 20 and 60-day moving average. So highlighted here in orange, which is where the trading range was, and only just last week where we managed to get this breakout move to the upside, and possibly with this breakout move to the upside, it's giving us some early indication that gold is right now turning back into an uptrend. And probably again, as inflation becomes a main worry here, probably gold will likely perform well as an inflation hedge moving forward. And we could probably see gold prices kind of trading back up higher to retest the 2000 psychological resistance mark with a time frame of around the next 3 to 6 months out. So that is the key breakout move that we are seeing right now. And key thing to note, for such a kind of a trading security to be trading in a consolidation for such a long time, 5 months or so, usually when we get a breakout move, be it to the upside or downside, the breakout will likely be a sustainable move that could actually last some time. And henceforth for gold, that has been trading within this 5-month range, within 4% trading range as well. Likelihood is we'll see this bullish momentum sustaining. And again, target-wise, we'll be looking for gold to actually retest the $2,000 psychological resistance mark. So if you take a closer view on gold prices, this is on the daily time frame. This is the 5-month range that I just marked up over there in the previous chart. There's another key breakout point that actually happened just recently as well. If I were to plot this downtrend line by connecting the highs that was set back in August of last year to this recent high that was set back in June of this year, we managed to plot this downtrend line. You can see when we actually break above this 5-month range last week, it also break out above this long-term downtrend line at the same time. And since the breakout point over here, you can see the general momentum has been holding on rather strong. And again, with this key breakout move to the upside, at the same time breaking above what I would say a key obstacle for gold prices that have been capping price down, and looking at the current momentum that is still holding on strong, probably we'll likely see this bullish momentum sustaining here in the near term. And some upside target that we have in mind following this breakout move would firstly be this resistance here at $1,960, and then after which possibly to retest the psychological resistance at around $2,000-ish region. So that will represent a upside of around 5 to 7% upside here, possibly with a time frame of 3 to 6 months. So that's the view here following this breakout move. We are rather bullish here for gold prices as a form of inflation hedge. And henceforth, if it were to kind of see any form of weakness here in the near term, any form of pullback down to this support level would likely present a good accumulation point down to around $1,815 to a range of $1,835. So that support level also coincides with the 20-day moving average. And henceforth, if we were to pull back to those levels, we will likely see further buying, further accumulation happening around those levels, where this support at $1,815 to $1,835 acts as the next floor for this uptrend to actually bounce back higher to the target that we just mentioned, $1,960 to $2,000. But all in right now, looking at this breakout move here right now, with the momentum still holding on strong, we believe the current trajectory will likely be more biased to the upside, and we'll likely see further kind of a push through higher here in the near term for gold prices. Yep, so that's all we have today, and I will see you guys in the next one.